Hi, in this video, we're going to talk about Axtel Industries, a company that's into manufacturing of machinery for primarily for food industry. And I think they were started primarily in 1991 with over almost 3 decades of experience in manufacturing these equipments, which are heavy in nature. And presumably, this stock had again gone up almost 12% today, and partly it could be driven due to fundamentals as well as in terms of since it's a small cap stock as well, where it's again currently valued at around 600 crores, right? Let's deep dive into their financials. The company again is making almost close to 153 crores, and presumably which is trading at price to sales of 4 times. And also again their operating margins are again kind of fluctuating, like where they earned 11% in March 12 and they've increased to 19%. So now, as an investor, when the margin has almost fluctuated over the last 10 years, we have to deep dive into the reasoning behind why there has been a fluctuation in the margins as well. And the same goes for the net profit as well, where the company's net profit margin has also fluctuated, which could be due to changing raw material price as well as pricing flexibility that this company has, and also they might also have a client concentration risk as well, which we have discussed in our previous videos. So to validate this, I studied their annual report as well as their credit rating reports. So CAR had rated one of their borrowings, and we can actually find the key weakness being susceptibility of profit margins to volatility environment coupled with customer concentration risk, which is validated. Like we seen this margins being fluctuating over the last several years, and they have a few very large organized players in food value chain. Hence, the company has limited bargaining power in terms of ability to pass on any adverse movement in raw material prices. And also, again, the customer concentration was at 68% of the top line, right, during 2020. So, which is quite high. So, if one of this customer again leaves becoming a customer, then usually what happens is there is a big top line impact where the revenue could be impacted, where six clients again almost contribute to almost 60% of the revenue, which is approximately around 90 CR. So that's again a huge material impact for this company, right? And also again elongated operating cycle. Usually again it takes almost 3 months for this inventory to again get disposed of. And also again due to lockdown, again this company faced issues with regard to working capital. And so since they were able to convert most of their profits into cash, they were able to come out unscathed in terms of handling their working capital. So as you can see, almost the receivables cycles, it was 90 days earlier, but now over the last several years, the company has taken certain measures to bring this cycle down to almost close to 30 to 40 days. And also again, the net fixed asset turnover has also increased because the company is again now trying to improve its operating efficiencies by utilizing its fixed assets more efficiently, which is again a good thing. And the debt also had been negligible, where it has been 8 CR almost 10 years ago. Now there is almost negligible debt, and due to which again, with when the sales had almost become 3x, and also the margins have doubled. So what happened is the stock has almost re-rated, like from 14 crore revenue to almost 600 crore market cap. So in 2012, the company made a turnover of almost close to 58 crore sales, which was less than one-time sales, and the stock was undervalued. And in 2013, when there is high inflation and high interest rates, their market cap was around 8 crores. And today they are around 600 crores, and which is quietly around 100x, sweet 100x that again come in. So personally, again, I think I would watch how this story evolves over a period of time, whether the Atmanirbhar Bharat story plays out. And I don't have any holdings, and so feel free to share your pointers in terms of whether you would buy the stock or not. But I think it's overvalued at this point. So I would look forward to hear your comments in this video, and please feel free to subscribe to this channel and share it with your friends. Thank you so much.